All right, so I've got three put spreads expiring January 21st, which is 21 days away. And according to the tastytrade mechanics, if we have 21 days to go, we should manage the trade. So let's look at the position here. So I've got, is it undefined risk, or let's look at the mechanics, sorry. If it's undefined risk, we go here. If it's defined risk position, we start from here. So a put spread is a defined risk position. So, and then it says position has less than 21 days to expiration. Position has more than 21 days to expiration. If it's more than 21 days, leave alone until 21 days to expiration. Position has less than 21 days to expiration. I've got two choices. IV rank is high, over 30. IV rank is low, under 30. So let's go back to my positions. I've got Dash here, Dash 150, 145. Let me see. It's trading at exactly 150, so it's at the money. I collected $1 and it's worth about $2 right now, the spread. So if I close the trade, I can close it at $2. That means I would lose $1 if I close the trade right now. Now let's go see if it has high implied volatility, or if IV rank is high, it needs to be above 30. Questrade, the browser doesn't have anything for that, so I'm just going to go to MarketChameleon and I'm just going to look for the stock itself. So what was it, Dash? Let's start with over $1 billion. Let's filter by symbol, sort by symbol, sorry. And I'm looking for Dash, so it's going to be in the D's. Page 2, so Dash is over here. It has an IV rank of 13, so it's below 30. So according to Tasty's trade mechanics, I should just close the trade. If IV rank is low, under 30, position at a loss, hold until scratch. Actually no, so if the position is at a loss, hold until scratch or expiration. Okay. If position is profitable or at a scratch, close position. So in my case, it's at a loss, so I should hold until scratch or expiration. Okay, I'm okay with that. I could do that. All right, let's see the other position I have. So I've got Dash, I've got Fiverr, 115. Fiverr's at 116. I collected $1.05 for this trade, and it's worth, yeah, so it's at a loss right now. It's worth about $2.20. So it's at a loss. So let's look for the IV rank on Fiverr. FVRR. Is it under $1 billion or something? Why can't I find it? FVRR. All right, that's interesting. Over $1 billion. Okay, let's say anything then. That's sad if Fiverr is below $1 billion. I don't think Fiverr is below $1 billion. FVRR market cap is 4 billion. So why isn't it showing over here? All right, second page. FV. What the hell? Why isn't it there? That's interesting. Fiverr is not showing. FVRR. Wow, that's interesting. Why isn't it showing? What did I do wrong? Is there anything? Is there a filter on here that's preventing Fiverr from showing? FIVR maybe? No? That's weird. FVRR. Okay, let's options, applied volatility rankings, FVRR. Interesting, not there. Okay, let's assume it has, let's see what happens. If it has, what if it has, we know it's at a loss. Let's see what happens if IV rank is over 30, close and reestablish position in next expiration cycle. If it's below 30, position at a loss, hold until scratch. So let's see what happens. Let's see what happens if I just close and reestablish position at the next expiration. So basically I'm rolling it to February. So I'd add a put here, February, and then add another put here, February as well. So I'm basically rolling the January put spread into a February put spread. Same strike, so 115, 110, but just changing the expiration. So I'm basically just rolling. See, I could roll it right now for a very small credit of about 20 cents. So there's a 40-cent spread here divided by 2, so 20 cents or less. So I could collect an extra 20 cents from rolling it from January to February. What that does is it gives me more time for the trade to win. I already have 21 days to go, but this gives me more time. But it also allows me to sell call spreads that'll give me more credits if I have to. Call spreads against it to mitigate. Okay, so that's a possibility, or I could just hold till expiration and see what happens. But what if it's a complete loser at expiration? What's the plan if it's a complete loser at expiration? I would have to hold. I'd have to roll at by adding a contract. See, that's a problem. I don't know if I want to add more risk to this trade by adding a contract, or I can roll naked. Rolling naked would be easier, but I'm concerned with my buying power. And I'm also concerned with stocks that are dropping 30-40%. Fiverr has it's not even making money yet. So yeah, it's considered highly evaluated. So it's considered over evaluated. So it could drop hard, like all the other stocks, like Peloton. So I'm not sure, or like Roku. All right, so let's skip this one. Let's go see my other positions here. I've got Square at 161.55. I collected $1. It's worth almost $1.80, so it's at a loss. Position is at a loss. My short strike is 160. Stock is 162. So let's go see if it has high implied volatility or not. If it's over 30 or not. Square. IV is 27, so pretty close. It's not below 30. It's not above 30, but it's very close. So it's at 27. So IV rank is a low under 30. Position at a loss. Hold until scratch or expiration. Position profitable or a scratch close position. If it was above 30, close and reestablish. So let's try closing and reestablishing. Let's see what it would give me. So if I would close February 18th, so I guess if it's below 30, they're saying let the probabilities play out. If it's above 30, it has high IV, keep playing the same underlying. It's a good underlying. IV is high, just play it again. So roll the trade. I guess that's the idea behind it. So what am I selling here? 160, 155. So 160, 155. So I'm rolling from January expiry to February expiry, keeping the same spread. So I'm closing what I initially have. That's why I'm buying the 160. And then I'm selling the 160 because I'm opening a new trade. So I could do it, as you can see here, I could do it for a credit as well of about 20 cents as well. So I could roll Square and Fiverr for a 20-cent credit, keeping the same strikes, and gives me more time for the trade to be a winner, or gives me more time for the trade to come back up if it is coming back up, though. That's the thing. Is Square profitable yet? Yeah, it's profitable. It's profitable, but it has a high PE ratio. And Dash, Fiverr we saw is not. What about Dash? Is Dash profitable? I don't think it is. Yeah, it's not profitable yet. It's got a $5 loss earnings per share. All right, so what am I gonna do? Should I just hold till expiration, or should I roll, give myself more time? So let's say I roll Square, I get an extra 20 cents from the put, but then I can go ahead and add a call spread to it for an extra credit. Let's say I add a call. Let's see how much I can get, or how far I can go. Let's say I go to 190, 195 call spread for an extra credit just to reduce max loss. I can collect 20 cents from rolling the put, and I could collect an extra maybe 60 cents from adding a call spread to the trade. And I would be about 30 points away from the current market price. I'd have a 190 call. I don't like selling calls because every time I do, it ends up, especially when I sell for mitigation purposes, it ends up getting breached. So selling calls on red days is not ideal, but selling calls on green days, it gives you a better chance of winning. Square, let's see where Square was trading at recently. So the last 15 days, Square was between 175 and 160. Last month, it came from 201 to 162. Can it jump back up to 190? Or it could, if it goes up gradually, I can eventually close the trade for 50% because in this case I would have collected $1 from the initial put spread, 20 cents from rolling the put spread, and then 60 cents from this call spread. So I would have collected $1.80, and then I would just try to close I would have an iron condor in February that I would try to close for 90 cents in this case. Not sure what I'll do. Let's go back to Dash here, the one that's making the least money. Yeah, it's definitely at a loss. Let's see what happens if I roll Dash as is. I think I checked Fiverr and Square, but I didn't try Dash. So let's see if I roll Dash as is to February, same strikes, but just different expiry. So 150, 145. Yesterday would have been a better day to roll, but it was pretty up, so there was no reason to roll unless we knew that it was going to drop today. So yeah, same thing. We could probably collect the 20 cents from rolling it from January to February. And what if I add a call spread to it afterwards? So obviously I wouldn't choose the 150. I would try to go further, maybe like 180, 185. That would get me about 50 cents. I can collect an extra 50 cents from the 180, 185 call spread. In addition to the 20 cents from rolling the put spread, and Dash is at 150, so I'd be 30 points away on the call side. It's not a bad idea, but part of me doesn't want to do it just because from experience, I know the call spread is gonna end up bothering me. But I mean, it's still 30 points away, and it could end up just moving sideways, and it could end up helping me. Let's see what the chart looks like. Dash. 3 months, 245. Last month it was trading at, it was trading at, okay, 174 was a high, 175. So 180 seems safe. 3 months, but I mean, it could fly. Now, another thing to look at is earnings. Does it have earnings before February 18 expiry? So earnings is estimated February 24, so it could change. Let's look at Square. Earnings is February 22nd, and Fiverr earnings is February 17. So Fiverr estimated February 17, expiry will be February 18. So I'm probably not going to roll Fiverr because I don't want to have a trade going into earnings. So I'm not going to roll Fiverr and just hope that it stays above 115 by January 21st. And if it's not, then I'm just going to have to roll, either take the loss or roll by increasing the contract size, or roll naked, I guess. I don't know. But I'm not going to roll as a put spread right now to February. What if I sell a call spread right now for January? Because I've got the January 21st, right? Here, let's go back to Fiverr. Fiverr, January 21st. What if I just sell a call spread just to mitigate the loss in case Fiverr continues to drop? So what if I sell a call spread? But probably because I've got 21 days to go, I can't get much from the call spread. So, and I'll have to be close to the current market price. So let's see, 130, 135 call spread gets me about 70 cents. And Fiverr's at 115. See, mechanically, that's what I should do, is sell a call spread to collect some credit. But I'm pretty sure as soon as I do that, the stock's is gonna fly, and then then the 130 call spread is gonna cause me trouble. And I don't think it's worth going any further. 75 cents is good. Yeah, hard decision. So when in doubt, I will do nothing. I'll just hold on to it and see what happens. But if I wanted to manage it according to the tastytrade way, because they all have low IV and they're at a loss, I should hold until scratch or expiration. So basically I should put a limit order to close for $1 is what they're saying. So I'll just hold to see what happens. I'm disappointed though, because I'm not too sure what I'm going to do if it's completely breached at expiration. Usually I'll roll naked or increase the contract size, but I'm not too confident right now, but we'll see. I guess we'll see what happens. Or the other solution would be to pretend as if it has IV rank above 30, but it doesn't. But would be to just roll as is to the next expiration and add a call spread to it as well. So I think I'm gonna not do anything. That's it. So I just wanted to share with you the tastytrade mechanics for rolling put spreads with 21 days to go. And I also want to share my thought process as well. Alright, so if you have any questions, leave in the comment section below. Like always, if you can open an account with Questrade to trade on the stock market, Use my referral link below to get $50 in free commissions. Thanks for watching.